Hey, Fund AI Mentals viewers. Welcome back to the channel where we break down the biggest AI funding stories that are shaping our tech future. Today, we're diving into a massive funding round that's got everyone talking. Anthropic just closed a jaw-dropping $13 billion financing round, and there's a surprising new player at the table that's making waves in Silicon Valley. Let's start with the numbers that'll make your head spin. Anthropic, the AI safety company behind Claude, just secured $13 billion in funding at a staggering $183 billion valuation. That's billion with a B, folks. This isn't just another funding round. This is a statement that positions Anthropic as a serious competitor to OpenAI and other AI giants. But here's where it gets really interesting. While we're used to seeing the usual suspects like Amazon, Goldman Sachs, and venture capital firms writing these massive checks, there's a new heavyweight in the ring, the Qatar Investment Authority. The Qatar Investment Authority, or QIA as it's known in finance circles, just made what they're calling a significant investment in Anthropic. This is huge news because it marks Qatar's aggressive entry into the artificial intelligence funding space. We're talking about a sovereign wealth fund with $524 billion in assets under management. That's serious firepower. Mohammed Al-Hardan, who heads up technology investments at QIA, didn't mince words about why they chose Anthropic. He specifically praised the company's strength in coding automation and enterprise applications, saying it's definitely found its niche in the enterprise. This enterprise focus is key. While consumer AI gets all the headlines, the real money is increasingly flowing toward business applications. What makes this deal fascinating is the broader strategic implications. The Middle East has been systematically positioning itself as a major player in AI funding. Abu Dhabi's MGX has already invested in OpenAI and backed the massive Stargate infrastructure project. Saudi Arabia's Kingdom Holdings and MGX have both put money into Elon Musk's xAI. Now Qatar is making its move with Anthropic. This represents a fundamental shift in how AI companies are thinking about funding sources. Historically, Silicon Valley has relied on traditional venture capital and tech giants for these massive rounds. But with AI development requiring unprecedented amounts of capital for compute, training, and talent, companies are increasingly turning to sovereign wealth funds with their deep pockets and long-term investment horizons. Here's where it gets even more interesting for us AI funding watchers. Al-Hardan revealed that QIA expects to complete between 20 and 25 technology deals this year and next. That's nearly double their historical average of 10 to 15 transactions annually. They're not just dipping their toes in the water, they're diving headfirst into the AI funding pool. The fund is typically writing checks around $100 million per deal, though they can go as low as $25 million for early-stage opportunities. They're taking minority positions, usually under 15% equity, which suggests they're looking to diversify across multiple AI bets rather than going all in on just one or two companies. But Anthropic isn't Qatar's first AI rodeo. They've been building a diverse portfolio of artificial intelligence investments. Earlier this year, they backed Instabase, a business data management startup, and Applied Intuition, which focuses on autonomous vehicles and drones. They also invested in Cresta, which specializes in customer service automation. What's particularly smart about Qatar's approach is their focus on enterprise AI applications rather than just the flashy consumer-facing models. While everyone's talking about ChatGPT and consumer AI, Qatar is betting on the companies that are actually generating revenue from business customers, and Gulf states are racing for AI dominance. This funding round is part of a larger competition happening between Gulf states for AI investment supremacy. The UAE and Saudi Arabia have launched multi-billion-dollar funds specifically targeting AI model development, chip manufacturing, and data center infrastructure. They've even established their own national AI champions. Qatar was initially more cautious in this space, but this Anthropic investment signals they're ready to compete seriously. As one expert put it, there's a flying geese pattern where as soon as one Gulf state enters a new market sector, the others tend to follow. Qatar clearly doesn't want to be left behind in the AI race. So, what does this mean for the AI funding ecosystem? From a funding perspective, this deal represents several important trends. First, it shows that AI companies are becoming more comfortable taking money from sovereign wealth funds, even those from regions they might have previously avoided. Anthropic's CEO Dario Amodei had previously expressed concerns about authoritarian regimes accessing advanced AI models, but the need for capital appears to be driving more pragmatic approaches to funding sources. Second, it demonstrates the massive capital requirements for competing in AI. When you need $13 billion just for one funding round, traditional venture capital simply can't provide all the capital needed. Sovereign wealth funds with their hundreds of billions in assets become essential partners. Al Hardan was clear that this is just the beginning. Qatar is actively looking at AI companies across multiple sectors with particular interest in generative AI for media. Think companies that can instantly create music, photos, or videos. They're even planning to integrate potential investments with North Road, a Hollywood studio backed by Qatar. The fund is also keeping its options open for future rounds. While they didn't lead this Anthropic round, Al Hardan indicated they might choose to lead future deals, whether at the early stage or as companies approach public listings. As he put it, the luxury that we have is that because our mandate is so wide, we get to choose. So what does this all mean for those of us tracking AI investments? First, expect to see more sovereign wealth fund involvement in major AI funding rounds. These funds have the capital and long-term investment horizons that align well with AI development timelines. Second, enterprise AI continues to be where the smart money is going. While consumer AI gets the headlines, the companies actually generating sustainable revenue are typically focused on business applications. Third, the competition for AI investments is becoming truly global. It's not just Silicon Valley VCs anymore. We're seeing sovereign wealth funds from the Middle East, Asia, and other regions competing for stakes in the most promising AI companies. This Anthropic funding round represents more than just another big number in the AI space. It's a signal that the funding ecosystem for artificial intelligence is evolving rapidly, with new players bringing unprecedented amounts of capital to the table. For Anthropic, this funding provides the resources to compete directly with OpenAI and other AI giants. For Qatar, it's a strategic bet on becoming a major player in the AI economy. And for the broader AI ecosystem, it shows that there's still plenty of capital available for companies that can demonstrate real enterprise value. What do you think about sovereign wealth funds playing a bigger role in AI funding? Are you bullish on Anthropic's chances against OpenAI with this new war chest? Let me know in the comments below, and don't forget to subscribe for more AI funding analysis. Until next time, keep tracking those fund AI mentals.